The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. It's actually St. George's Day, so to all those who celebrate, happy St. George's Day. I'm Steve Sedgwick, and these are your headlines. Donald Trump eases back on Jerome Powell, insisting he has no intention of firing the Fed chair after all. Calming concerns over the Fed's independence and prompting a spike in US futures. US equities rebound from Monday's sharp sell-off after Trump backs up comments reportedly made by the US Treasury Secretary Scott Bessent, saying the tariff standoff with China is unsustainable. Elon Musk says he will step back from his government work at Tesla's net income sinks by nearly 3/4 in the first quarter as the company posts its biggest earnings miss in half a decade. And the IMF slashing its global growth forecast for 2025, warning President Trump's tariff policies risk unleashing a major negative shock. The chief economist Pierre-Olivier Grinchard telling CNBC we're in unprecedented times.
There is a huge amount of uncertainty in the global economy right now. So even for ourselves, in terms of figuring out where the global economy is going, we had to take a slightly different approach than we usually do.
And SAP, Europe's newly crowned most valuable company, posts a first quarter operating profit beat, up 58%. We're going to hear from the CEO, Christian Klein, this hour. Good morning, everybody. How are you all? Look, let's just take a step back a second. How long have you and I been doing this, team? Well, we've been doing about a quarter of a century together, haven't we? And we all know now that sometimes the market moves. They can be about positioning. They can be about the news flow. They can be about speculation, buy on rumor, sell on fact. And look at why a couple of individual stocks rallied yesterday, why the broad market rallied so aggressively yesterday, compared to the actual facts. Let's go through it, shall we? Just a little bit before we move into the reads as well. And I've got all these reads on. I've got them all queued up for you. The market rallied, let's say two macro, and then we'll do the Tesla story as well. One, the market rallied aggressively yesterday because the Treasury Secretary at a private conference happened to say, look, the status quo with China, it's not sustainable. Trump backed it up later on as well, saying, yeah, look, we think there's going to be some kind of deal, what have you, at some stage. There's no talks. As far as you and I know at the moment, the Chinese and the Americans aren't talking. So these massive 100% plus tariffs on both sides of the Atlantic, they're there. Market rallies 1,000 points on that. But the market didn't just rally 1,000 points on that. It rallied on the fact that apparently Trump didn't want to fire him all along. This is Jay Powell, of course. You know who I'm talking about as well. But hang on a second. He couldn't fire him. Have a look at the rules. Have a look at the laws. He could sideline him a little bit. He couldn't fire him. And Jay Powell has been really, really firm about this. Nah, I'm not going anywhere until May 2026. So that's 2 for 2. Two things that the market rallied aggressively on that aren't happening or couldn't have happened anyway. Let's go for the third one as well, which is the Tesla story. You've got Elon Musk, who has, let's be brutally honest, been a tad distracted. Do you remember all those tweets we talked about yesterday? Sorry, posts and not tweets. He paid a lot of money to rebrand it. But he's been thousands of tweets in a very short period of time. He's got several other jobs, including this Doge job. He's still going to be there for the foreseeable future, but he said he's going to reallocate time from May back to Tesla. Too late? They're going to change the... So everybody's now buying Tesla, not on the fact that we've got great new news on robo-taxis, on AI, on batteries, on tariff relief, on people buying more cars of the revamped line, on cheaper value cars. None of that is rallying so aggressively after hours, 5.4%. It was at 220 something, 227 the shares. They've rallied 10% off their lows. On what? The numbers were dreadful. Just show, but it's a great example. That's what I'm saying to you. In a quarter of a century, I've seen a lot of this. You've seen a lot of this. We've all do this on a daily basis. 3 bits of news where actually there was nothing tangible. I may step back from Doge. We may have talks with China. I'm not going to sack Powell. Let's go on. President Trump says he's not planning to fire the Federal Reserve Chair Jerome Powell. I may have mentioned it. His latest remarks come just days after lashing out at the central bank chief, describing him as, quote, a major loser. By the way, sir, you appointed that, quote, major loser. I'm writing on social media that Powell's termination cannot come fast enough. Yeah, but maybe you had a look at the rules, sir. You and Hassett, yeah? Hassett didn't like him either the other day. You can't fire him. Anyway, look at the market. Massive rally yesterday, massive rally being implied by the futures there, with the Dow caught up another 443 points. Well, speaking to reporters after a ceremony to swear in Paul Atkins as the chair of the US SEC, that's the Securities and Exchange Commission, of course, Trump explained his decision.
The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not, but it would be good timing.
Really, sir? You never had an intention of firing him? Or actually, was the market, here's another thing, was the market actually most excited yesterday, ladies and gentlemen, about the fact that there are guardrails in place? I've spoken to, as you have, I'm sure, I've spoken to Trump insiders from Trump 45 who said we could actually tell the president what we thought in those days. We could actually put guardrails around some of his decisions. And the thing is, with Trump 47, the big difference is nobody dares say anything against Trump. Well, maybe we're seeing the first signs of actual guardrails. Now, whether that's coming from the bond market, whether it's coming from Scott Bessent, whether it's coming from some of the other billionaire supporters of the Republican Party, who knows? But maybe the market rallied aggressively yesterday because it thought, hang on a second, maybe there are guardrails around some of the oscillation, the vicissitudes of thinking from the administration. Anyway, Tuesday's market turnaround came after President Trump talked up, here we go again, relations with China, signaling that tariffs will drop substantially.
145% is very high, and it won't be that high. It's not going to be that high. It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to have. It's not going to happen. We're going to be very good to China. Have a great relationship with President Xi.
So you kind of got to talk to them. They got to talk to you. This is both ways over the Pacific. If you're going to cut these tariffs from 145%, one of you's got to say, "Should we chat? Should we parley?" You know. Anyway, the rally was also triggered, as we said, in part by remarks that the US Treasury Secretary Scott Bessent reportedly made at a closed-door event held by JP Morgan Chase, where he said that the tariff standoff with China cannot be sustained and he expects the situation to de-escalate. Well, I showed you the US futures. I'll do it again because I think it's a big story. Here we go. Up 1.2%. Is the implied open for the Dow. NASDAQ seen up 1.8%. Let's have a look at where the US markets were yesterday again. Big rally. Hey, let me use the word of the day. Huge rally. What do we see? Financials were up 3.3%. The laggard was consumer staples. They still rallied 1.6%. So across the board, we saw not only the market rallying, but the dollar. Now, the dollar's been a one-way trade, hasn't it? Let's be honest about it. The dollar index trading at multi-year lows. The dollar falling 7 to 9% by various measures as well. But actually, back on the front foot, dollar versus the Swissy, which is probably the ultimate currency safe haven. Dollar's gained 0.4% versus the yen, back up by 0.2%, and similar moves against the euro and indeed the pound. The Treasuries, again, the Treasury's got to be the ultimate guardrail if we're talking about guardrails. Just coming off that 440 handle on the 10-year, 4.346%. And the Asian equity markets, a couple of percent higher last time I looked across the board. That's roughly what we've got, isn't it? On the Hang Seng's up 2.5, Nikkei up 1.8. Not a lot of action on the Shanghai Composite, though, because maybe they're thinking, okay, great, unsustainable tariffs. And who's going to move first? Who's going to blink? I don't know. European futures, they look pretty positive. We kind of eked out gains yesterday in London, Frankfurt, and Paris. It was one of those days where it was kind of nothing kind of move, and then suddenly we eked out a 0.6% gain, certainly on the FTSE and indeed the CAC. The DAX was up by 0.4, but look at that. 2.5% higher is where the DAX futures are currently trading. Right, let's get back to the news from the IMF, which hit our inbox yesterday afternoon, didn't it? The IMF has slashed its global growth forecast for 2025, warning of a major negative shock from Trump's tariffs. The US was handed an almost 1 percentage point downgrade from January's forecasts. With the IMF also lowering growth expectations for other major economies, including the UK and China. Now, Carolyn, who's in DC, she spoke to the IMF's chief economist in Washington and asked about the downgrade.
There is a huge amount of uncertainty in the global economy right now. So even for ourselves, in terms of figuring out where the global economy is going, we had to take a slightly different approach than we usually do. We basically established that reference forecast based on all the policy announcements up to April 4th. So that's after the Rose Garden announcement on April 2nd by the US administration. And then we looked at the world based on this set of assumptions. And what we see is a fairly significant downward revision for growth in 2025 and 2026. We're seeing growth at 2.8% this year and going back to 3% next year. But overall, the cumulated downgrade is 0.8 percentage points. So that's quite significant.
It's the biggest downgrade, or the slowest growth rather, since the COVID pandemic, the second slowest growth since the great financial crisis. How critical is this juncture for the global economy?
Well, it's quite critical because, of course, things could go and get worse if the trade tensions escalate further. I think everyone is kind of waiting to see where things are going to go. And that uncertainty is actually also a factor that is leading businesses to suspend investments, suspend purchases, decide to wait and see. Everyone is waiting and see. And that's never good for growth. So we're seeing that. We're very concerned that even with the pause that was announced on April 9, because that pause lowered tariffs on a large number of countries, but it really ramped them up against China and with countermeasures adopted by China as well. And so under that alternative path, this pause scenario, even if extended permanently, we still see a very sharp slowdown in global growth. Now, I should point out immediately, this is not a global downturn. What we're seeing is not on the scale of what we had during COVID or the global financial crisis. It's a sharp slowdown, but it's not a downturn. But the risk of a downturn have increased, and we estimate that there are around 30% now. That's up from around a little bit more than 15% back in October. So that's, those risks have doubled.
That is the excellently named Pierre-Olivier Grinchard over at the IMF. Right, well, our US colleague spoke to the ECB President, Christine Lagarde, who gave her take on the central bank's policy diversion with the Fed.
We have inflation coming down seriously. As I said, last reading 2.2%. Our projection for 25 is likely to be 2.1%. Inflation expectations are very anchored around the 2%, including in the medium term, and we have growth which is projected to be 0.98%, depending on whose projections you're looking at. The US is a different situation, and the impact of tariffs will be different on the two economies.
Certainly will. Coming up on the show, Elon Musk says he's going to step back from his government work at Tesla as Tesla's net income sinks by nearly three quarters the net income fell by in the first quarter of the year. Well, I've got a great guest for you who will come good after the break. Plus, Spain steps up, vowing to meet NATO's defence spending goal. You're only about a decade late, Spain, but anyway, good news. We'll have more on this one later this hour. And don't miss our interview with Christian Klein, the CEO of SAP, after it posted better than expected first quarter earnings. That's coming up at 6:30 BST. Elon Musk says he will pull back from his work with the Trump administration after Tesla posted its biggest revenue and earnings misses in half a decade. Net income at the automaker sank by nearly 3/4 on the year, coming in at just over $400 million in the first quarter. That's $1 billion drop. That's before tariffs, ladies and gentlemen. Meanwhile, revenue came in at $19.3 billion, nearly $2 billion below expectations. In better news for the company, gross margin ex regulatory credits actually came in higher than expected, but the figure is still at a multi-year low. Take a look at that margin figure. Look where it was and look where it's got to. But it was Musk's announcement that he will pull back from government work that moved shares and extended trade, pushing them sharply higher. On the call, Musk gave his take on the Trump administration's tariffs.
Tariffs are still tough on a company when margins are still low, but we do have localized supply chains in North America, Europe, and China. So that puts us in a stronger position than any of our competitors. I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do.
Vittoria Ferraris is EMEA Auto's Managing Director at S&P Global Ratings. Vittoria, I know you've had all kinds of problems getting to air, so I'm manfully sticking to the task. Thank you so much indeed for sticking with it. I'm desperate for someone to talk to today, and I'm glad it's you. Vittoria, give me your round-robin view of what we just heard from Tesla yesterday before I ask you more pointed questions.
Yeah, sure. And by the way, thank you for inviting me, for having me on the show. I believe it's the first time. Now, what we had anticipated already before tariffs that 2025 and 2026 would be challenging for a pure battery electric vehicle producer because consumer sentiment has grown a little bit more chunky in at least two of the three major markets. And even in China, where EV penetration maintains a fairly strong momentum, we observe a relatively harsh change in consumer preferences that is more favorable to domestic products as opposed to international one. So it is fair to say that we were expecting a Q1 results that, what was communicated yesterday was pretty much in line with our expectations. Low volumes were known beforehand, as they were mainly linked to a production switch over to the Model Y refresh, which meant for Tesla some weeks of lost production. And besides that, we had factored in rising competition, weaker pricing, and some higher input cost. Now, we had expected Tesla EBITDA margin in a corridor of 13 to 15% over the next 2 years, which is still actually better than relative to investment grade automakers, which are more in the 12. So yesterday, no big surprises.
Okay. Vittoria, I'm going to reread your title. You are the EMEA Auto's Managing Director. But arguably, this is a company that kind of wants to prove that it's not just about autos, that it's about automation, that it's about batteries, that it's about AI, that it's about robotics as well. Those who are massive fans of this company cite those areas for why it's worth 100 times forward and why it's going to be worth a multiple of what it is now. Did you hear anything in the last 24 hours that says to you have more faith in the company's ability on batteries, on robotics, on AI, on robo-taxis?
Well, clearly our perspective is very much focused on autos. I believe that the good thing that we hear is one of the really big drivers of the story for this company is the strong liquidity. Liquidity ends the quarter with $37 billion and virtually no debt. This gives the company a very comfortable headroom to fund its product roadmap and the long-term capacity expansion that they are eyeing, mainly around the Cybercab, which is scheduled for the volume production starting in 2026. So yes, it's true. Most of the developments actually are around robotics, but more near term, the essential a key driver for Tesla is keep up with the plans for new vehicles, including more affordable models. These remain on track, apparently, for start of production in the first half 2025, and this is critical for our assumption for future growth.
Victoria, yesterday, the market got very excited about Elon Musk stepping back a bit from Doge and spending more time in Tesla. But the one car I understand that he's designed from start to finish was a complete flop. That is the Cybertruck. We just showed pictures of it as well. Is Elon Musk now a liability for Tesla rather than the reason why so many people want to own the stock?
It's a very interesting question, I have to say, but I would say right now, a little bit, I would say, out of scope for the credit story, because here what we are missing right now at Tesla is the visibility on this more affordable entry-level vehicle. This is really, I would say, a turning point for the company in many jurisdictions, in particular in China and Europe. And this is what we are actually expecting to see in 2025.
Victoria, I'll ask one more question, actually. I think the producer's moving me on. There's a very glib line, but I think it resonates. And the glib line that I heard from someone else, it's not original, was EV buyers don't wear cowboy boots. And you'll know where I'm going with this one as well. He's aligned himself with Republican, arguably right-wing causes. The people who tend to buy EVs tend to be, dare I say it, politically leaning to the left as well. Has the brand damage in America, outside of America, dare I say even in China, where he's associated with the Trump regime or the Trump administration, has the brand damage been so bad that actually these figures can't recover, even with the kind of improvements such as robo-taxis, such as a revamped lineup, such as a low-cost model that many people are expecting?
It's probably a question that for the whole market, but we believe that it's a little bit too early to judge that upon the Q1 results. So it could be actually a risk. And so part of this, I would say, governance is already reflected in our rating story. But we believe that we will need a little bit more time in order to fully appreciate whether there is damage and what the entity of this damage is.
Superb. Look, I think it is our first time chatting, but I've loved every minute of it, and thank you for persevering. I know there were some technical issues getting you to air, but it was well worth it, Victoria, and I enjoyed our conversation. Victoria Ferraris, who is EMEA Auto's Managing Director, S&P Global Ratings. Until next time, my friend. Right, let us move on. You can find more on Musk's attitude to tariffs. What did he call Navarro, everybody? Can you remember? Something about a sack of bricks? Anyway, you can find more about Mr. Musk's attitude to tariffs on the CNBC website. President Volodymyr Zelensky has said that Ukraine is ready for talks with Russia in any format once a ceasefire is set. Meanwhile, the Russian President Vladimir Putin has reportedly offered to halt the invasion at the current front lines, according to the Financial Times. Yeah, I don't think he means the bit about Kursk, though, does he? Diplomats from the UK, France, Germany, Ukraine and the US are holding talks in London today aimed at securing a ceasefire. The United States is proposing to unofficially recognize Russian-controlled areas in Ukraine, according to an Axios report. The plan, part of a peace framework that would see the US lift sanctions on Russia and a small part of Russian-occupied Kharkiv returned to Ukraine, was presented last week. The US is expecting a response to the proposal today, which they say has stated, is President Trump's final offer. Does President Trump he doesn't really have final offers, does he? Everything's transactional, isn't it? Anyway, Spain, here we go. Spain, what is Spain? Third, fourth largest economy in Europe? Fourth largest economy in Europe. Spain. I'm not asking the thin air, by the way. I have got a correspondent here. Anyone? I have all kinds of voices in my head. Some of them are real.
Really?
Good morning, how are you?
Good morning, very good.
Good. I'll just do my read before you interrupt. Spain, I'm joking. Spain has vowed to hit NATO's defence spending goal of 2% of GDP this year. Oh, well, that's good news. Spanish Prime Minister Pedro Sánchez said the country would contribute to defending Europe as he brought forward Spain's previous self-imposed deadline of 2029. Charlotte, I have enormous respect for the magnificent country that is Spain. I have enormous respect for the king, who I've met, and he was a very nice man. I have enormous respect for the Prime Minister, who I've met on many occasions, and he's a very nice man.
And you grilled him on this topic.
And I grilled him on this topic.
Yeah.
Look, I made a mistake earlier, and I'm going to correct myself to the viewers. I said that Spain's only a decade late on getting to these levels. I was wrong. They are 20 years late, even if they make it next year. The Riga Agreement, I double-checked, where NATO nations said they would get to 2%. The Riga Agreement comes from 2006. Now, I know there was a time frame on that as well, but Spain has aggressively failed to achieve 2%. No wonder Trump is peeved with us in Europe.
That's the criticism that they have faced. And, again, there's cultural reasons in Spain why there wasn't a lot of spending into the military. Again, it's, living memory.
You're not going to blame Franco, are you?
Because politically, it was a difficult thing to spend a lot of money on the military because of history, because of living memory, living history of a military coup in 1981.
The parliamentary, the standoff in Parliament.
Yeah,
what was that?
1981.
Yeah, 81. Yeah, I remember it.
Yeah, and most people in Spain remember it. So that's why politically, doing a lot of spending on the military was not something that was positive, and there was no party that was supporting it. And then you had austerity after the financial crisis.
If we're going back, we're talking about Germany's got its own problems for obvious reasons. The Iberian Peninsula, was it Salazar in Portugal as well?
Yeah.
So, we had this era of dictators and military coups on a regular basis. Yeah.
And then you had austerity in 2008, and there was no spending on the military. And they have relied, that's true, on being under the umbrella of the US security. And they have bases where there are US troops being based as well. But that's why now you see, that's why these changes is really important, because there is a reckoning that they cannot rely on that defense from the US. They cannot take it for granted anymore. So that's why this announcement yesterday by Pedro Sánchez about finally reaching this 2% this year, which means that the defense spending will be increased by 10.5 billion euros this year to more than 23 billion as well. So he has increased the spending on military over the past 4 years, but he has faced the criticism while saying that he was supporting Ukraine, for example, not putting that spending into NATO. So now this will be happening. Pedro Sánchez speaking yesterday saying that the country needs to modernize its security and defense capabilities.
Nuestro objetivo es modernizar.
Our objective is to modernize security and defense capabilities in Spain and Europe with a comprehensive 360-degree perspective, mainly focusing on three things. First, the improvement of the conditions of our armed forces. Second, the modernization of our equipment. And third, the development of new technologies, with a priority focus on those dual-use applications and devices that can serve both military and civilian purposes.
So this announcement coming just a month before the summit of NATO leaders in The Hague. So, finally coming online. But as you say, one of the issues that this target is kind of already obsolete, because we heard from President Trump, they actually want the NATO allies to spend more than 5% of their GDP. So reaching 2% is a big move from Spain. It was 1.28% last year in terms of spending. So they are increasing their spending dramatically. But we are still very far from the target that President Trump might want to see from a lot of the NATO leaders.
I suppose, just thinking about this from another point of view as well, is Spain's economy has been rocking and rolling. It's been really strong.
And that is the extra argument.
Yes,
how can they justify?
So as the economy, which has been outperforming the rest of Europe, grows and its GDP grows aggressively, then obviously 2% of that is a higher amount of military spending it needs to find from somewhere as well, just in pure individual numbers as well. So that's a very interesting point. I presume the Spanish have used that one as well.
They grew at more than 3% last year. It was 2.5% this year.
Well,
when you see France saying they will spend billions in euros despite the deficit that they have, they say Spain, given the EU recovery fund that the country received after the pandemic as well. That's all of these arguments going in the direction of Spain should spend more in defense as well and contribute more to NATO. So now this announcement has come through. The Prime Minister again saying that this will not go through a Parliament for agreement. The money will be reallocated from some of the spending that's already been put in place. He's facing criticism back home. Mr. Feijóo, the leader of the opposition, saying he's doing this without a budget, without the agreement of his cabinet, and without the authorization of Congress. So again, politically, it is a tricky move for the Spanish.
I'll do this very quickly. There's the Tajani argument as well, who is, of course, very important member of the Italian Italian government as well, that actually we should be looking south as well as to the north and to the east, because there are challenges that NATO and that European security faces from migrant flows and indeed from unsettled areas on the other side of the Mediterranean, which is again a Spanish argument as well.
Yeah, they have some strategic locations, Ceuta, Melilla, the Canary Islands. They are very strategic points as well from a military point of view.
Yeah, absolutely.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.